This is how I got started. In the beginning, it was anything but passive. It was a big headache, a huge time commitment, and a big stressor on my life. Today, it's not. Now that I've learned the ropes, now that I've built a team, now that I've built a portfolio, I've built my skills, it is significantly more passive for me. So you got to understand that with anything, it's going to take some work to get started. But if you can build the systems, you can build the processes, you can build a system where now you own the assets, and then you have a system where these assets pay you every month or every quarter, and you don't have to spend that much time really worrying about it. What you're going to be doing is you're going to be overseeing them. You got to do that with your stocks. You got to do that with your real estate. But you don't have to physically go do something. You don't have to go out and plunge toilets. You don't have to go out and talk to tenants. You don't have to go out and lease out the properties. You can hire people to do these things and make it fairly automated. And I'll show you what that means. But you got to understand that in the beginning, it is going to take work. So the way the real estate investing works for me is I will go out and invest in some property. It might be a single family home. It might be an apartment complex. And the reason why I'm buying this property is not for me to live in myself. It's for me to rent out to other people. So what that means is I'm going to find this nice couple right here, this guy with a mustache, this lady with a nice braid. In my native language, Punjabi, we call a mustache a much. We call a braid a gut. So now these people are going to come in and they're going to live in this property that I own. In exchange for them having this place to live, they're going to pay me rent every single month. But here's the interesting part about it. I don't want to know who these tenants are. I don't want to have to talk to the tenants. I don't want to have to get the complaints about things that are wrong in the property. I want to have a system where it is passive and money still is hitting my bank account every month because there's enough margin in this property to pay for all the expenses. What are your expenses? Your property taxes, your insurance, your maintenance, your management fees, your vacancy costs, and then put some money in your pocket every single month. And also cover your mortgage if you have one. So just like I did with stocks, let me start by talking about the theory, then let's get a little bit more practical. The reason why a lot of wealthy people and people who aspire to become wealthy like real estate is because when you invest in real estate, you get three things. Number one is you get cash flow if you do it correctly. That's the key because a lot of people, unfortunately, don't do it correctly. Number two is you own a hard asset. When you own real estate, you have something that you can see, feel, and touch. If you go out and you invest in, almost dropped that, the Verizon stock, you just have a piece of paper that says you own some of the Verizon company. If you walk into the Verizon store and you say, hey, give me a free phone, you're not going to get anything out of that. So when you own real estate, you own the bricks, you own the land, you own the windows, you own the things that you can see, feel, and touch. And then number three is you also get tax breaks. As an attorney who's not your attorney, what I can tell you is that real estate has some of the biggest and best tax breaks that a tax code has to offer. What does that mean? Now, when you get this cash flow, right? If you make $10,000 in profit in cash flow from your rental property, you don't have to pay taxes on all $10,000. Why? Because the real estate tax code says so. The real estate tax code says that you can depreciate certain things on this property. What that means is you can tell the IRS, hey, I made $10,000 in profit, but because my property is 1 year older, I shouldn't have to pay taxes on all $10,000. Maybe you only pay taxes on $5,000 because your property is 1 year older. Maybe you pay taxes on $0 because your property is 1 year older. There's a lot of nuances as to how much you can depreciate, but the key is you can lower your taxable income because real estate offers big tax breaks. Make sure you talk to a licensed tax advisor to know how to do this the right way because there's a lot of different things you need to know to do it the right way, but you got to understand that real estate offers a lot of tax breaks. So that's the benefit of investing in real estate. But what do the numbers actually look like? Because you've probably heard people saying that you can't find any good real estate deals out there in this market. Inflation has made it hard to find real estate deals, but I can tell you as somebody who was buying real estate even during the real estate boom, 2021, 2022, when the real estate market was the hottest that we have really ever seen, I was still finding great below market deals. It takes more work. It takes more effort. You're going to have to put in more offers and you're going to have to do a lot more research compared to 10 years ago when everything was a good deal. But that doesn't mean that it's impossible to find good deals. Yes, it's harder to find good deals in a hot market, but that does not mean it's impossible. So what does that mean that I'm looking for? And again, this is just what I do. So let me wipe off the whiteboard and let me show you what I look for. When I invest in real estate, my goal is a 7% cash on cash return. In the stock market, you get dividends. Here, I call it a cash on cash return. In commercial real estate, this is called a cap rate. What this means is for every dollar that I invest, how much cash flow am I going to make after paying for my expenses? This is money that's going to hit my bank account and that I get to keep. This is kind of like your net income or your profit. There's a lot of words for this. So what that means is for every dollar that I invest, I want to see 7 cents of profit after paying for my expenses, my property taxes, my insurance, my maintenance and management fees, my vacancy costs, anything in between, all of my costs or my mortgage if I have one. I want to see 7 cents back for every dollar that I invest. This does not include appreciation. When I invest in real estate, I'm not looking for price appreciation. That's not my goal. If home prices go up, that's the icing on the cake. But that's not how I make my investment decisions. I make my investment decisions based off of this number. If I can see this cash flow in a growing area, remember, just like how in the stock market you're investing in the asset, not the cash flow, it's the same thing here. When I invest in real estate, the first thing I'm looking for is where am I investing? Is this an area where populations are growing, where the money is moving to, and where people are moving to? If yes, then I will consider it. Because if people are moving out, young people don't want to live there, crime is going up, that's not a place where I want to park my money. Because this is a long-term play. This is a place where I want to keep my money for a long term, where I want to see rent prices grow because the value of this area is growing. More and more people want to be here. This is a growing area. This is where people want to be. So this is where rents are going to be higher in the future. That's where I want to invest my money. So how do you find this? Well, you got to look around. And for me, the way that I run my numbers is now I take how much money that I invest and I put in my expenses. And yes, you can estimate these expenses. Talk to your real estate agent. Talk to the city assessor, because you might not know what the property taxes are going to be when you purchase it, but your city assessor will, and they can help estimate those numbers. Talk to an insurance advisor. Talk to an insurance broker. They can give you an estimate as to how much your insurance costs are going to be. You can get a good estimate as to what your expenses are going to be on this property. And that way then, when you take a look at what the estimated rent is, because if you have a good realtor, they will tell you how much you'll be able to rent this property out for. And you can also ask your property manager how much you're going to be able to get in rent. When you see what the rent is, you can get an estimated cost, add in a little bit of miscellaneous costs, because there's always going to be some extra costs. Add in your maintenance costs, add in your management costs, add in your vacancy costs, add in your property taxes, add in your insurance. And that leaves you now your net income, your profit. And now you can decide, is how much money you're going to make, if there's any money left over, going to be enough for you? And the reason why I say it like this is because there are some parts of the country where you're going to see very teeny tiny returns, if any. I remember when the markets are booming in 2021 and 2022, I was looking at real estate around the country. And I remember looking at some properties in Austin, Texas, and Arizona, where there were these apartment complexes being sold at a 1 cap, meaning a 1% return on my money, where if I invested $1 million of my own money, the return that they were estimating was $10,000 a year in cash flow after all the expenses, and even that was kind of a stretch. For me, that didn't make sense. But for other investors, the reason why they like that deal is not because of the cash flow. That was besides the point. They didn't even care about the cash flow. What they were hoping for is I buy this $1 million property, that way I can flip it for $2 or $3 million in the future. That's not the game that I play, because that's speculation. I have no idea how much I'm going to be able to sell this property for in 3 or 4 years, because I don't know where the economy is going to be. I don't know where the markets are going to be. I don't know where interest rates are going to be. I don't want to play that game. But I can understand much better how much rent I can get this year, next year, the year after that, and the year after that. And if I can make enough money from my rent to cover my expenses and put some money in my pocket, that's something I will consider investing in, because that's what I can estimate. I don't like to play that speculation, flip it in a few years game, because well, I have no idea what's going to happen in 5 years. If property values and rental values go up, great. If property values come down, oh well, I still get my cash flow. If we enter a recession and I have to cut rents, okay, I have enough margin in the deal where I can still cut rents and still be profitable. I'm a conservative person, and the reason why is because I made a lot of dumb mistakes. I have screwed up many times, and so that's why I like to be very picky with my deals, because I have screwed up a lot of times. And so I want to make sure that I can protect myself and have margin in the deal. That way, when something goes wrong, because something will always go wrong that you don't expect. That's kind of the name of the game with real estate. But that's why I want to have some margin in there. Now, the difference between real estate and stocks is obviously, well, it's more difficult to start with real estate. You have to find the team. You have to find a property manager. I don't manage my properties myself. I hire a property manager. These are people that are going to lease the property. They're going to deal with the tenants. They're going to screen the tenants. They're going to handle the repairs. They're going to work with the contractors. They're going to work with the cities. They're going to pay all the bills. They're going to do all of that. The reason why a lot of people don't like working with property managers is because they take money right off of the top. A good property manager might take 8%, 9%, 10%, even 12% in some instances right off of the top before you see a penny. And a lot of people don't like that. Well, I don't like dealing with tenants a whole lot more than that. So for me, I'd rather pay a fee That way I can buy my time back and have a good property manager. The second part to this is people will say, well, there are some bad property managers out there. You bet yourself there are. And I have dealt with all of them, it feels like. I have dealt with a lot of bad property managers. I have had to fire a lot of property managers. I've been screwed over many times by property managers. But then I go out and find a new one. It's part of the game. Okay, if you don't want to do it, don't get involved with real estate. If you're willing to do it, you can see some huge returns and get a lot of benefit out of it, but it's not for everybody. But you got to understand that if you want to really be an investor, not a manager, I don't want to be paid for my hours to manage properties. That is not the game that I want to do. I have a business I got to run. I don't got time to sit there and talk to tenants, and I don't want to do that either. I have other things that I want to do, so I'd rather pay a property manager that fee. Then once it's passive for me, I also want to make sure now that the property manager understands my goals, my intentions, and they're the ones that are paying the bills. And now they're also going to be working to make sure that these properties generate a profit, because now these property managers will generate a monthly report and a quarterly report and an annual report of each one of my properties. That way then I spend my time reading the reports. How much money are these properties making? Are properties losing money? What are the expenses? What are the repairs? And is there something that needs to be changed? Then I can read through these, talk to the property manager, and decide if we need to make changes, how we can improve things, and see how we can continue growing the profits. So if you're thinking about investing in real estate, know your game. For me, the game is cash flow. And this is where you got to know where you're going to look. If you want to find good cash flowing properties, there are certain parts of the country, certain parts of the states where you're going to find better cash flowing deals than others. The Midwest, I'm from Detroit. Our office is in downtown Detroit. Michigan has great rental locations. If you haven't seen Michigan yet, don't count it out. Michigan is a beautiful state. I've spent a lot of time in many different states. Michigan is absolutely beautiful, and you can get some great cash flow. These types of deals do exist. Maybe they don't exist in Miami. Maybe they don't exist in Los Angeles. Maybe they don't exist in Manhattan. But you will see it in other parts of the country, which means if you want to invest in real estate and you live in one of the big cities, you might have to look elsewhere. Maybe you have to go to a different part of the state. Maybe you have to go to a different state. But real estate is much more involved. You got to be willing to talk to people. You got to be willing to hire people. You got to be willing to see different locations. You got to be willing to go through properties, and you got to be willing to get kicked in the face, because it is tough in the beginning. Just like with stocks, right? We said stock market investing is a 10-year game. It's the same thing with real estate. The first few years, you're going to be finding people, trying to find the properties, trying to get your first few deals, making a little bit of money. Then once you start acquiring more properties, that's when you start to see more cash flow coming in. You start to fire the bad team players. You start to hire some better team players. But it's a process. Nothing worth having comes easy. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.